Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. I'm talking about one of my favorite trade setups. But before I jump in, if you've been enjoying these videos, be sure to subscribe to the channel and click the notification bell so you don't miss any new uploads. And if you find today's video helpful, be sure to hit the like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback. I often make videos based off of your comments, right? Suggestions that people want to learn more about order flow. So your support really does go a long way in helping me create more content just like this. So let's go ahead and get started with today's topic, all right? One of my favorite trade setups is the exhaustion print. And this was something that I've been using in the order flow for a long time. I can't remember. It's one of my original sort of order flow trade setups that I always look for in the market. And, as you know, generally at each price level, market does a good job of distributing volume, right? There's a lot of volume traded on the bid, a lot of volume traded on the offer. And what an exhaustion print to me is, it's a sign that the last buyer has bought in an up move or the last seller has sold in a down move. And today in the bonds, it hit on both ends of the range. It hit on the high and it hit on the low. And, when I first developed the Orderflows Trader software, just a little bit of a backstory for you guys. I didn't plan on getting into the software business, right? I was trading order flow. I was using a regular footprint chart, but there were certain things in the order flow that I'd always look at, and there's the ratios. The order flows ratios was something that I devised years ago, which have been copied by a lot of people. The exhaustion print, right, which basically is just a simple thing to identify. It's simply looking at the volume and seeing how much volume traded. If it was under a certain amount, to me that was a sign that the last person that was buying in an up move had bought, or the last seller selling in a down move had sold. And years ago, back in the 90s, Tom DeMark, I remember sitting in a room with him, and he was talking about all the different forms of analysis, right? This is around the time his book on his first book came out. I forgot the name of it, something about technical analysis. But sorry, Tom. And he said something that always resonated with me. And again, this was back in the mid-90s. He says, a move is over when the last buyer has bought. The New Science of Technical Analysis. That's the name of his book, I believe. When the last buyer has bought, the move higher will end. Or when the last seller has sold, the move down will end because there's no more selling pressure. Right? Just as there'd be no more buying pressure on a move up. And looking at a footprint chart, this was like one of the things I identified very early as a trader. Yeah, I could see that because I'm seeing the volume that's trading on the bid, the volume trading on the offer, right? I could see at the high of the day. Okay, let me just remove these lines here because people say, well, I can't see because there's this green line. Well, that's how I know it's the high of the day and the low of the day. So I'll just remove this thing here that says current day, open, high, low, close. Okay. Let's remove that, hit that back, and get the chart back here. Okay, so I can see up here 4 lots traded, just as down here 2 lots traded. Okay, so I know that's telling me that on the low of the day there was only 2 lots traded, and the market reversed and started trading higher. Just at the high of the day, traded 4. That's all that can trade. There's no more buying interest. Market starts reversing and sells off. And why is that important? Okay, for a number of reasons. One, obviously, there's no more buying pressure, right? Aggressive buying or aggressive selling to the downside. But being an electronic trader at trading firms, banks, etc., I know what it's like. People always talk about market manipulation, right? When you're at the high of the day, you always want to trigger, I just want to buy that one lot to see if, there could be any stops up here at this high, right? Maybe it could trigger off, a stop run, just as at the low, maybe trigger off a stop run. So I know that there was no stops at this level or at this level. Now, that doesn't mean that, maybe a tick or two higher, there could have been a bunch of stops. We don't know, but it didn't get up there, right? You often see, that's a game that the locals would always like to play, buy one at the market at the new high, buy it at the offer to see, because once it prints, right, if people have stops there, it's going to trigger all the stops, and then you're going to get another, 3-4 ticks move to the upside. Okay, just as if you're doing it at the low of the day, you're always trying to look for it, because again, this was a low here at 24. that you had just made a little bit earlier at 6:40 this morning. Now it's coming back at 7:30. And there was some decent volume here. There was 1,000 traded on the bid here, 567. So it gets through there, and it can only trade 2. That's not a good sign. Okay, so obviously there's no more selling interest there. Now, if you are looking at a footprint chart, right, that's very easy to see, right, because you can see 2. If you're looking at a bar chart, okay, I don't know if I got a bar chart here, right? This is, well, this is E-minis, but same thing. You can't tell, oh, 2 lots traded down here or 4 lots traded up here. You can't, right? You can't see that. If I was, let me just put this on a bond chart here, so that the bond, I was looking at a 4-range chart. Again, you're not going to see that what the volume was that traded down here. You're just not. Just as up here, you can't tell that 4 contracts traded up here. It's impossible, right? And I see people posting stuff. Yeah, I follow the order flow, and they put up a bar chart like that. What are you following? You're following price. You're not following order flow. Okay, but if you're looking at a chart, a footprint chart, yeah, you can see that. And one of the early tools, the original tools that we had programmed into the Orderflows Trader was what we called back then small prints. We've since renamed it to exhaustion prints because it's really a sign that the market is getting exhausted. Okay, and you can see it right in here, exhaustion prints. Now, there's 2 ways you could show it on your chart, right? The original way was simply just highlighting that box, right? So I can see there's exhaustion print. And you'll notice on moves up, you tend to see exhaustion prints coming in at the bottom of the green candles on a move up. Just as on a move down, you tend to see them on the top offer side of the move down. But one of the enhancements that we made several years ago was the ability to not just draw out, highlight that box or draw out a little zone. And you could draw it out if you want, however many boxes you want. Just maybe you just want to have a level drawn here, so an area that the trade would be invalidated by. Okay, that's if I were to draw it out 5 levels. But I like to draw out any sort of interesting thing in the order flow. I like to draw it out what we call until tested. Okay, basically what that does is it just draws out that zone, right, until it's tested. Right? And this is something that, again, has been part of my trading for a long time using a footprint chart. And oftentimes, you see them, intraday during the moves up or the moves down or pullbacks. But today was special, in my opinion, on the bonds on the 4-range chart. They happen both at the high and the low. And people say, well, it's because you're manipulating your chart. Okay. Well, if you look at, say, a 5-minute chart, still got it, right? Here's your 2 down here. Here's your 4 up here. Right? You still got your exhaustion prints. And, other markets, same thing, right? Ultra bond at the high of the day, you had a 3, you had a 3, you had 2 exhaustion prints, sort of this double top coming in up here. I have the exhaustion prints turned off, but if I were to turn them on, you can see where these exhaustion prints came in. Obviously up here at the high of the day, right here, start coming off, exhaustion print, but look at this on the move up. 2, 5, 5, 2, right, on the move up. A market like E-minis, just really quick. E-minis is a market that distributes the volume fairly well, right? Because at most levels you got decent. It's one of the most liquid markets in the world. Okay, so you don't get a lot of exhaustion prints on the highs or the lows, but you do get them a bit in moves. And the way I use them in the E-minis, let me just turn them on here. Exhaustion print, I'll just keep it until tested. Okay, give it a second for this chart to come back here. If you're in a trade and you start seeing exhaustion prints, right, going in that direction. So if you're long here from earlier, right, today, this is around cash opens here, and if you're long and you're seeing the exhaustion prints on the bottom of the green candles, that's what you like to see, just as if you're getting short, right, and then you see an exhaustion print, 1, 2, 3, 4 in a row, 4 exhaustion prints. Now, I'm not saying 4 in a row is great or anything, but if you're in a trade and you're starting to see exhaustion prints at the top of your bars, and the market's going in your direction, that's a good sign. Okay, and a nice move down today, right? We had a nice that sharp sell-off around 9:15 today, 9:15 and 9:30 in the equities. So again, it doesn't matter what market you're using, right? This is 10 years, so this is a, what is this? It's a 4-range chart. This is today. Again, once you're familiar with them, you can see them easily. I mean, you're just looking at a market like this, right? You can see 7, 5, 2. But really where you want to see them coming in for trade opportunity purposes is at after moves, right? At swing lows or swing highs, not just anywhere. Okay, if it just pokes up, puts in a little bit of a swing high here, yeah, that's going to be more effective in my opinion than this one here, as the move's already happening. I like it that it's coming in on a move, but for trading purposes, I'd like them coming in sort of at swing highs, swing lows, obviously highs of days and lows of days. Now again, the thing with them, with these exhaustion prints, is you're not limited to, well, I use a value of 9 in most markets, right? On markets like 10 years, they trade a ton of volume. You know, each bar is, you know, in the tens of thousands of contracts, right? 16,000, 25,000, 32,000. You know, maybe I could make it a little bit bigger, right? You can make it 25 or even 50 if you want. But let's make this 25. And again, it's not a number that's necessarily set in stone, right? So you can see here is 19, 4, 8 on the move up. Get up here, now here's 27. Okay, so what's an exhaustion print? Well, again, as a trader, this is a decision you have to make. If you're using, when you're using a software, right, you have to set in a value. You have to set in a number, a threshold, right? If I'm using 25, it's 2 contracts more. Does that mean it's not an exhaustion print? Well, no, you can still take it because look at the volume. It's 22,300 contracts trade on this bar, and it only traded 27 at the high. Every other price level, the lowest is 200 here, but 500, 700, 2,000, 5,7, 5,8, 1,900, 5,000, and just 27. So maybe you're willing to take that shot off of this exhaustion print. If you're going to say, well, it's a 27, doesn't meet my threshold of 25, I think you're just, you're splitting hairs there. Okay. You can see down here, right? A little pullback, 13. Here at the low of the day, exactly 25. This was, what day was this? Yesterday, 29th, right? Right at the low of the day. You've got exhaustion print, 25 contracts. This bar traded 12,000 contracts, 25 trade here, and you got a nice move up. Okay, so, that's the whole concept of exhaustion prints. It's nothing fancy, right? It doesn't have to be something so complicated. Oh, I got to use this, I got to rip out a calculator or draw squiggly lines. No, you're just looking at the actual volume that's being traded. It's simple. It's not complicated, right? As traders, you want to keep things as simple as possible because that's going to give you the good trade opportunities, right? Things that just make sense. And this was something to me that just made total sense to me ever since I started using a footprint chart. I took, because I didn't start using a footprint chart until, I don't know what year, 2010 or something around there. But I was able to take all the knowledge that I had gained in understanding, because I've been trading electronic trading since electronic trading basically started back in the early 90s. So I've been looking at a dome, right? Because that's how, we trade on Globex, right? You'd have the price level, then you can see the dome, and markets didn't move as fast as they do now. I mean, there's something in the bid below the market. It's probably because it was a GTC or something. But I took all that knowledge I had gained over those years of sitting on a trading desk, trading electronically, on the Globex system, the Project A, NYMEX, and eventually it just became Reuters 2, and the regular was just called Globex. But, that's what goes into my software, right? That's why we have all these tools in the Orderflows Trader, right? These are all tools that I've developed Okay, concepts that I've developed based off of my years and years of experience. All right, everyone. Hope you guys enjoyed that video. Be sure to subscribe to the channel if you haven't, and I'll catch you guys on the next video. Bye-bye.